Guys, let me know if I'm audible or not. I think I should be audible. If people are already here, they can let me know. Am I audible? Let's wait for more people to join in. Anyway, it's not 12 years. Okay, I am audible. All right. Speak louder. Oh, all right. Give me 1 second. I think this should be loud enough, I guess. This is the average. Sorry for some background noise, but this is the average. This is the voice at which I record my videos as well. So I think it should be all right. Is it audible to everyone? Hopefully, um, no lag or anything. We'll wait for more people to join in. I'll also. All right. Give me 1 minute. Meanwhile, if you have any doubts, you can put it in the chat box. Most people will join in around 11, around 12, because I had told them to put a reminder for 12 p.m. So mostly people will join around 12. Meanwhile, if you have any doubts or you want to ask anything except for the market view, you can ask that. Also, make sure that you like the video as well. Um, we'll get some people to join in soon. Can we consider the gap as a demand or supply? Yes, you have to consider the gap as a demand or supply. But but you cannot consider the entire area of the gap. So let's say there is a gap up here, all right? So let's say there is a gap up here. This is a big gap. So when I'm looking at this gap right here, you see the move has actually started from this bunch of candles right here. All right. So now you cannot. I wouldn't consider the any demand zone here. All right, because in this case the gap happened after a big move. All right, but let's say in a case like this where after a consolidation there is a gap, then you can definitely consider the origin of the gap as your all right. So it's a bit tricky, but the basic concept is the same. If it was sideways before the move, then the origin of the gap becomes a zone. But if it's already moving and it just gaps in the direction of the move, then there is no zone there. All right. Also, another thing is that let's say this area after the gap, there is a tiny pause and then it continues up. So now this area is my demand zone. All right. Now I won't wait for the gap to fill up. Obviously, here it breaks down and then goes back up to the supply and then falls again. But I won't be waiting for the gap to fill up here for me to judge the trend. All right. Once this candle is broken, for me the trend is gone. So now I'll be waiting for some sort of a breakout on the upside here. Hopefully that clears your doubt. Spot and future charts are moving differently. All right, let's look at that as well. So I think they're moving similarly. I'm not sure what the difference is. There might be some difference in the intraday chart. That is because the premiums keep adjusting. All right, so intraday charts, the future also has a premium or a discount. All right, so if you see right now, the premium is around 60 rupees, 490 minus 430 something, right? So it's around 60 rupees. So the premiums keep adjusting. If the premiums start to fall, the difference will fall. So there can be a time where spot is sideways, but the future is slightly downtrending. All right. So if you want to watch anything, you watch the futures chart because the future chart is actually traded. The volume on the spot chart is basically your combined volume of all the stocks. So you cannot exactly trust the volume on the spot chart. Also, it's quite uniform, right? So it's quite uniform throughout. So this is because that it's the combined volume of the chart of the constituent stocks, all right? So you cannot exactly consider the spot volume. So just use the futures volume, all right? We'll discuss the market view in some time when more people join in around 12:05 p.m. Let's look at some other questions till that time. Do you still take personal mentorship? Yes, you can send me a DM on Instagram. PM Industries, all right. So PM Industries, it was setting up nicely. There was an entry here, and now it's continuing. So whenever you're looking at a swing stock, all right. Uh, so this might be a bit complex, but listen to it very carefully. Whenever you're looking at a swing stock, you want to look at the zone from where the last move happened. All right. So if you see, this was the last high here. So this was the demand zone which this was holding. All right. So let's say you enter here, and tomorrow it starts to come down to this zone. So there's a very good possibility that it can simply just set up again and go up. All right. So every failed move is not actually a failed move until the zone is broken. All right. So this looks good. It's a bit extended for me now. Obviously, yesterday also it was a bit extended. It was already on my watch, but it looks decent, right? Indo amines again. See, in this case, if you see, it's not actually uh, doesn't really look strong right here. Obviously, um, it is not bearish, but if you see, it has pulled back to the demand zone now. So now there is an entire series of up move and some contraction, which is not yet done. All right. So I will be waiting for that sort of a move here. All right. See, in swing trading, you can take one of two routes. All right. Either if you look at the weekly chart, there is a breakout on the weekly right here. All right, and there is a demand zone here as well. So now you can buy the stock. You see there's a nice rounding bottom as well. So you can buy the stock inside this entire area, waiting for a big weekly breakout. All right. This is more this is more of a uh, some sort of a medium term investment. All right, where you look at the weekly charts, and then if it's setting up on the weekly, you buy it and you let the stock go around in this entire range. All right. Secondly, you can use a daily chart. All right, where you wait for it to set up on the daily chart. So let's say you bought here after this expansion here, and it started to fail. So you're out right here. You're not really giving the stock a lot of room to to move around. So what I'd usually do is I will if it's not setting up on the weekly charts, I will try to find something else. All right, because when it's setting up on the weekly chart, there's a big chance that even if there's a failed breakout, even a failed breakout can give you 20-30% very easily. Even if it fails, let's say there's a breakout and it fails on the weekly charts, this breakout itself would be somewhere around 14%. All right. So I would suggest, especially if you're starting out, if you are new to swing trading, you should definitely look out on the weekly charts. That way you can easily avoid charts which are not doing anything on the weeklies. All right. And maybe you can buy in something which is trying to move up from a weekly base. You can get in at the right time and maybe catch a very big move. All right. So you will definitely get into the stronger stocks. Obviously, use the 50 EMA on the weekly as well. Uh, 50 EMA works pretty well, and you can pick up stocks around the 50 weekly EMA whenever they set up according to your uh, whatever setup you follow. All right, but but if you're just watching the daily chart, you have to be very quick with adjusting. All right, because things can go south pretty fast. All right, so Triveni turbines. Also, looking at the weekly chart gives you uh, some sort of a higher time frame, intent, if you can say that, right? If it starts moving out from here, you know that the correction has been done, and maybe this is the start of a new bull run. So you can maybe hold it for a longer period of time if the overall market is doing good. All right. So it gives you some sort of a confidence in the chart where you can hold it for a longer time, I guess. All right. So Triveni turbine, if you see now, it can go up, but personally, I wouldn't really buy a stock uh, which hasn't moved anywhere for the past 2 months. All right. I want the range to be wider first, and then I would like to see some sort of a contraction. All right. So so if it drops straight down and it just goes sideways, this is not exactly what I'm looking for. All right. I would want a nice drop and then a bigger range to play with. So not my uh, trade here. All right. All right. Let's talk about the markets as well, since it's already 12:04. So Bank Nifty. So I was expecting. So let's talk about what we discussed in the previous video. All right. So in the previous video, I was expecting Nifty to continue from this area on the upside. All right. I was expecting Nifty to push through into this supply. So this was your uh, previous close right here. Obviously, it's the first move into the supply. So don't buy straight here. You look for a pullback and then you buy in. Right. So yesterday, what happened? There was a lot of news. There was a lot of RBI uh, news yesterday. So we came down into this demand again, and then we went sideways, right? So if you see the overall action in Nifty, which is going on here, is let's put up a line chart. So if you see what's happening here is first there is a move up, all right. Obviously, it's a V-shaped recovery, so don't end up entering at the top of a V-shaped recovery, all right. This is usually the worst place to get into any stock or the index for that matter, right? So we get a nice up move here, and then this is your impulse, this is your slowdown. So there's a high chance the index stops here. Obviously, if you see, there is no zone here. So there is nothing here except the low. So if this is broken, then therefore then it's definitely a downtrend, right? So whenever there is an up move, there will be two parts to an up move. One will be the impulse move, and the second will be a slow grind towards the upside. So whenever the stock has to stay bullish, it will protect that the start of that slower grind, because if this breaks, then there is nothing to protect on the downside till the low or whatever zone uh, the move started from. All right. So yesterday it came down here. Obviously, there was a nice long opportunity here as well. You could have taken it, and there was a nice up move as well. All right. So what I was expecting was just a gap up and maybe some nice action here, and we continue up. But what happened was we broke down into this zone again. So this is a clear boundary for our range. All right. And then we went sideways into the close, which is all right. Now today morning we started to expand on the downside. So this is where you could have taken some shots. All right. So this is where the bias now turns bearish, because this entire range is now complete, and now we're trying to leave this range on the downside. All right. So obviously we can see some down move on the Nifty, but also remember that we are already down for the day almost 100 points. All right. So maybe if you have to take some shots, maybe wait for a move up and then a continuation move. Or if you are adventurous enough, you might take shots here as well. Obviously, do not just trade blindly, uh, listening to me. All right. Make your own analysis, do all that stuff. But my personal view is bearish from here on. Obviously, Bank Nifty is also trying to break down on the weekly. If you see Bank Nifty, it's trying to push through into this area of weekly demand, which is somewhere around 33,700, that level, right? So sorry, 43,700. So see, again, two things can happen here. If you are trading it, you have to be aware about what all can go wrong. So see, since Bank Nifty is already pushing lower and Nifty is just entering into this demand zone again, all right, if Bank Nifty takes a breakout here, let's say it fakes a breakdown and starts to push up like this, which has already happened. You see, it has happened here as well, and it has happened multiple times. On the upside as well, it fakes a breakout, starts moving down, fakes a breakout, and starts moving down in the direction of the trend. So it can fake a breakdown, maybe because there is a demand zone here as well. So it can come down and then start moving up. So in this case, I would be very quick to adjust, because I know that this scenario can play out. All right. But if you're not aware and you're expecting a continuation of a breakout, even though Nifty is going into a demand and then bouncing straight back up, then you would get caught in some sort of a trap, all right, which you call it. But the thing to consider here is Bank Nifty has already moved down, so be very careful with your shorts, all right. So, all right, so you can put in your questions if you have anything about uh, any stock, or maybe some technical answers which you're looking for. All right, Amber Enterprises. Amber Enterprises is, again, it's extended. All right. See, the biggest moves in the stock, they will happen from a moving average. All right. If it's a short term move, it can happen from the 20-day moving average, but usually I will avoid it. But if you see, anytime the stock shoots up, it's directly from a moving average, um, which is in the direction of the trend, right? So if you see here, breaks down, pulls back to supply an EMA, and then falls. All right. Again, this is from the EMA. There is an attempt here, but this fails. That can happen, obviously. And then there's a move here. There's a move here. Again, an attempt here. Again, a move here. So you see all these big candles, they are coming out from the EMA. All right. So whenever you're far from the EMA, it means that some sort of move has already happened behind you. All right. So some sort of move has already happened behind you. So if you see this move, and this move has already happened, so now you are basically expecting a third leg of an up move, which is not exactly uh, correct. All right, maybe there was an entry here, but this was it in the stock. All right, no entries anymore. And this is the problem with people who start off doing the right thing, but ultimately get stuck at some level. All right, so the basic swing trading principle which the beginners follow is a breakout of an all-time high or a 52-week high. In theory, this is absolutely correct. This is the most bullish stock in the market currently. All right, but uh, but in practice, by the time you're buying this, it's very extended already. All right, so if you just shift your focus from this level to maybe a pullback buy at some EMA of your choice, that will drastically change your uh, entire trading uh, numbers. All right. So Varun Beverages is looking good. All right. Let's look at Varun Beverages as well. This is looking, yeah, this is decent. You can probably get in, but again, do not just trade on my recommendation. Right. You should know when you have to get out of the trouble. All right. So if it starts breaking this level right here, that's a good sign to exit. All right. Shouldn't be holding beyond that. All right, guys, make sure that you have liked the video if you are watching. Is LNT making a top? All right, so is it making a top? You cannot possibly say. All right, will it pull back from here? Again, you cannot possibly say, because see, first of all, whenever you're concerned about a stock making a top, what should you be looking at? You should look at the last high. This is the last high in LNT. All right, so this area right here, this is my last high. So then if I've spotted the last high, I will look at the demand zone which made the last high, which is this zone right here. All right. So until this demand zone is broken, there is no question of a top. All right. So you see, it simply uh, contracted here and broke out. So it can happen again. But is this a good buy here? Absolutely not. All right. Cannot uh, cannot possibly justify buying a breakout here, because this is a third breakout or a second breakout. So you see, this is the first breakout. There is a second breakout here, and this is the third breakout. This is not the time to buy. This breakout can fail easily, right? So, but it's not bearish as well. All right, my Unicoders as well. Nothing yet. Um, Nothing exactly going on. You see, it's very volatile here. So I don't really see anything, to be honest. Right? Maybe it sets up again, but right now there is nothing of value here. Right? So ignore this talk. Tech Mahindra. So IT stocks have been bullish. I have been talking about them since this move right here. See again, what is the basic concept? Again, if you see, it is pushing from the EMA. It is pulling back to the EMA after a breakout. It is consolidating around the EMA, and then it's pushing back up. All right. So this area right here leads to a move. And again, the same thing, consolidates around the supply, pushes up around the EMA right here. All right. So So whenever you see stocks which are trying to go from the EMA, always keep them on watch and make sure they're coming out of a consolidation. So something like this. Sometimes this might also happen. You might buy here and it might gap down. That can happen in a weak market. But if you're buying around the EMA, you have the chance of catching a big move. Uh, basically the highest chance of catching a big move compared to anywhere else. All right, because everything will start from the EMA. So, so this is your most optimal area to catch a big move. Tata Power was also looking decent, but see, it has already moved. Again, if you see, you need to focus around the EMA. All right, you cannot be taking any trades this far. You will just end up wasting time, even in the bull market. All right, so even in the bull market, if you see stocks which are moving up, they will start from a base which is around the EMA. All right, don't try to catch a third breakout here. Um, Same thing everywhere. All right, if you see this one as well, wasted entire uh, 2 months. All right, and then now it's breaking out. All right, maybe 1.5 months. The came close enough to the EMA, and now it's going up. All right, same thing across markets. Again, bases here start to move up. So stop wasting time in stocks which are far from the EMA. You will miss out on a lot of big moves. Which sector is getting dumped right now? I'll have to see the sectors, but last time I checked, it was FMCG. FMCG is extremely weak. So we have been talking about FMCG being weak, especially ITC, very weak. All right. So it pulled back for 2 days, and now it's coming back down. All right. So FMCG stocks are weak. Some of them are still strong, which is all right. Foreign beverages is strong, but at this point, it's not really moving with the sector anymore. Right. It's just moving on its own. And I think Colgate is also kind of decent. Not exactly falling here. Is it a good idea to get a funded account? If you, I don't think so. If you see, honestly, I would suggest you to just get funded account is not a very reliable way of accumulating capital, all right? Because you'll be in a pressure to do your best all the time. And let's say you have a bad day in the morning in the Indian markets, it will carry over to your funded account trading as well, right? So you don't want to be trading throughout the day. That's my entire point, because that will affect everything you're trading throughout the day, right? So I would suggest to stay away from a funded account and maybe um, use the rest of your time to do something which has a higher growth, which is a more sure sort of a growth trajectory. All right, do not waste your time with a funded account. And also, you'll have to be at the top of your discipline level every single day, because one or two bad days and it's done. Your account is gone, right? So that's a lot of pressure to carry every single day if you want to trade full time, in my opinion. Andrew Yule, again, this is extended. See, all these stocks, they are starting out from this area, right? So if you're buying here, you're already 8% away from the stop loss. And it's also eaten up into your risk to reward. So this is extended. See, this is whenever you see a stock which is moving up like this, you just stay away. See, there was an up move here, then a dip, and then this is the area you want to buy in. All right. So whenever you see a stock which is moving up in a channel, just stay out of it. All right. It's not going to end well most of the time. Sometimes it might just break out, which is all right, but most of the time, especially in a weak market, it's going to come down. Nifty 1 hour IC. I see inside candle, I guess. Um, so if it's an inside candle, it doesn't really say anything, right? See, I do not work with what sort of candles are uh, being printed on the chart, right? What I look for is basically broader range price action. All right. So let's say if this is a range, this is an entire range. I'm looking at how many times the price is basically trading inside the range. What are the spaces left? What are the zones inside the range? All right. So I'm not looking at individual candles. All right. I'm looking at a broader range and what is the price flow inside the range. Individual candles do not really matter all that much. So so this is an inside candle. It's all right, but Nifty is not bullish until this level is taken out, right? Which is around 19600 something on the chart, right? So it doesn't really matter what sort of candles are being formed, right? KEI Industries. Let's take this one. Again, nothing here, all right? It's tested the supply. Now it's pushing back down. So here we want it to make a higher low sort of a structure and then start moving up. Then maybe we can buy this, all right? Maybe something like this. So we want a nice push from the EMA along with maybe a higher low. That would be all right. So nothing here. API green energy, I guess you were talking about. See, again, this looks good, but these are very small ranges for me, right? I cannot work with tiny ranges like this. I want a nice, decent enough pullback. I want a pullback like this. I want a nice, sharp pullback. If the stock is flat uh, near the highs, I'm not really buying this, right? I want a decent enough because see on the weeklies, look at where this stock is, right? So if it starts going up like this, just exceptional strength. What I'm waiting for is a nice decent pullback and then a continuation again. So again a pullback, nice continuation. Again a deep pullback and then a continuation move. So it's very flat towards the highs, even though it looks bullish. I won't be buying this, right? So hopefully that makes sense. Adani Enterprises, all right. Adani stocks, very interesting price action building up in Adani stocks. Even though it is a bit extended, Adani stocks have reclaimed the 50 weekly EMA. They have tested the supply and they are moving out. So Adani stocks can definitely do something like this, right? So keep an eye on them. Buy according to your trading strategy. Do not take my word for it. Just don't buy blindly because I said they're bullish, all right? Because I can manage my trade very efficiently, might not be the case for you. So enter whenever you're comfortable with the stock. RHI Magnesita. Again, nothing here, all right? This is an earnings move, and stock is see on the weekly. Maybe it looks good, all right. Maybe it's trying to break through the base, so maybe it can go up. I'm not saying that if it doesn't fit my strategy, it cannot go up. That is not what I'm implying here. But I don't buy this, all right. I will want a better contraction towards the end. See if the entire range is contracting and then the stock leaves like this, that is not what I am trying to trade. All right. So because it creates a lot of supply here, so if it goes up, it can easily come down as well. All right. Maybe something like this is good. Goes up, then contracts, and then breaks up. Are any stocks under your radar? Even if they are, I cannot discuss them. So there is no point really. if you have any stocks which you want to ask about, we can talk about that. I can discuss about broader sectors. So if you have any doubts about a broader sector, you can ask it. All right. Uh, Bank of Baroda. Right. So PSU banks are moving up today, and this is not moving up. Right. So maybe wait for a nice move above this entire range. All right. Looks decent, but I will wait for a move through here, and then if it holds the pullback, you can buy here, or you can even get in at the breakout. You can get in with a small sell around the breakout, right? So something like this, see something similar to this area. Don't buy if it's dipped down and it's sideways. Don't buy it because it can just dip down, be sideways, and dip more. All right. So you have to stay safe from this first. So for that, we'll use a breakout. But that breakout can also be just a test of supply and it can go down again. So to avoid this, we use a higher low. Is this clear with everyone? Because this is a very fine concept which can which can help you buy just before the breakout. All right. So how is the structure playing out? When it dips down, it can just go sideways and it can go down. So uh, there is no proof of the stock being bullish. All right, because the last move was a bearish move. So now after that, you wait for a breakout. All right, into the supply. But from the supply as well, it can just be a lower high and it can push down again, right? But if it goes down and forms a higher low, then it means that this range is done. Now either it's a breakout or a fail, right? There is nothing more to be done here. All right. So if you see here, see this is a move till the supply pulls back, goes up, and again pulls back and forms a higher low here, starts to move up here. So when this entire structure is done, it means the range is done. Now either it goes up or it fails right here. You don't have to waste time in the stock, right? Instead of 5 days, your stock will move in 2 days. So you see something like this. I bought this around this level. If you see here, pulled back, tested the supply, made a higher low, and I bought it instantly when it started to break out, and now it's up. So you have to minimize the time you're wasting in the stock. All right. So let's look at one of my failed trades as well. Pulled back. All right. I bought in through this move, started to go up, and now at this supply, it's failing. All right. So now if it, instead of breaking down, if it starts to form a higher low here and goes up, then it means it's trying to push up, right? And there can be a re-entry done or maybe an addition done there. All right. Ignore stocks when they are pulling back for the first time and going straight up. Ignore these kinds of structures because there is no base for that move. All right. So, all right, Amar Raja batteries. Right. So this is bearish. This, if you turn it around, it's a long setup right here. So this is a bearish chart. Don't buy this. Do not buy this. Also, it's doing this in a weak market, huge volumes on the fall. Just an overall uh, bad stock. All right. Exide is doing much better. I think Exide has also changed. Uh, there is a big change in the fundamental of this company. I think it has changed some of its business. All right. So Exide has done really well. Amaraja battery, just stay away. ENC, Infraga, and see, these are extended stocks. You will not make the amount of money which you can if you buy far away from the EMA, right? You will be wasting a lot of time. Trust me. See, you buy, let's say this is a contraction, you buy here and it fails on the next day, you are out. So, but the chart has not really turned bearish, all right? The major demand zone is still holding. Here it sets up and now there's a big breakout, right? So, and this is an example of where there was a breakout from the extended contraction. In 70-80% of the cases, there won't be any breakout. So let's take another example. So let's focus on this area right here, right? So if you buy here, let's say you buy here when it's trying to break out, you get a move, then you get a failed move, you're out at cost, right? But if you're buying an extended contraction, let's say looking at this contraction at this high, you are buying on this day, immediately you're losing, and then it comes down. All right. So this entire transaction can be avoided. You can simply just buy here or maybe buy closer to the EMA. All right. Because this has a much higher probability of leading into a very quick move. If it fails, it fails. That's all right. But when it works out, it will move like this. So you see all these bases, they will happen around the EMA. Everything builds up around the EMA, and when they move out, they will push through the EMA, right? Even during a downfall here. So focus on buying stocks which are not extended, right? What UCO Bank? UCO Bank was actually a very good buy today. That is actually a very good buy today. Um, Also on my watch. Unfortunately, it's been pulling back from the highest supply. But the entry, if you have bought anywhere near this range, anywhere below 28.5, that's actually a really good trade. And IOB, I think it's a similar structure in IOB as well. Um, okay, IOB was also a good buy. This is a good couple of trades. Um, Good one. Nothing else to say. Jammu and Kashmir 57. All right. 57 again, very good buy here. So I'm guessing somewhere around this area or maybe this one, which is a decent buy. Added more at 67. Now this addition probably not my cup of tea here. I wouldn't be adding here. So this trade, the initial trade is really good, right? Good trades. All right, Suzlon. I think Suzlon has already moved up a lot. Right. So again, nothing in Suzlon. These are very far from the EMA. Know these, right? Don't buy Suzlon. Not saying it won't move up, but it's all about proper entry, and this is not proper entry. All right, guys, make sure that you like the video if you haven't already liked it. Bank Nifty, we have talked about Bank Nifty around the beginning of the session, so you can scroll back and look at it. But Bank Nifty is obviously bearish. The level for Bank Nifty stays the same, which is 45,200 on the futures. You can look for bearish entries below this level until this level is broken. Nothing right now. This is the 50 EMA. I only use the 50 EMA, right? This is the 50 exponential EMA um, for you guys, but doesn't really matter exponential or simple moving average doesn't make a difference since we are not using it as a strict boundary, right? We're using it as an area, so doesn't really matter all that much. All right, Kirloskar Ferris. Okay, it has fallen down. So maybe you can get in here, but what I would suggest is wait for a slight dip and then a move up. All right, this would be a very nice place to get in because right now it looks a bit floppy on the upside. All right, so maybe a quick correction and then a move up. Maybe you can get in. There's also a supply here, so wait for a dip before you enter this. Right. Yes, my average is 28 for UCO Bank. Yes, that's a good trade. 28 is a good trade. Are you comfortable with swings when the index is looking weak? No. No, don't buy swings when the index is looking weak. All right. So, so whenever the index is downtrending, all right, all of these areas. So this entire area, obviously. Um, but in this is a very volatile area because there's a lot of sharp up moves here. So maybe you can get in swings during these phases, but whenever it looks like it's trying to break a weekly zone, right? Let's say this zone right here. This looks like it's trying to break through here. Do not take swings, all right? Don't buy swings. It's not worth it. Don't buy swings when it's trying to break through. All right. Same thing here. Don't buy swings when the index is breaking down on a weekly level, right? We want to buy swings in this area right here. Again, don't buy here. You can get in when it sets up again over here. So right now it looks like it's trying to go down. Let's see how far it goes. Um, so you can maybe stay away from swings, but small cap index is still quite strong, right? Um, so this is why I'm still entering swings. Hopefully that answers your question. Until the small cap index breaks down, I will continue to buy small cap stocks, right? So until this level is gone, which is 11,660, 11,650, let's say, on the small cap 100 index, I will continue to get into potential swings, right? Ether Industries is looking good, but again, um, it's looking decent. All right, I've already gotten Ether Industries looking quite decent. Maybe you can get in. I think this is a chemical stock. Chemicals aren't really doing that well, but some of them are recovering from the lows. So maybe you can get in some strong chemical stock, right? So, all right. So we will stop here with the live. Hopefully, I've answered a lot of your questions. Make sure that you like the video as well, and I'll see you guys soon again. Right. If you have any doubts, you can drop a DM on Instagram. And people who are new here, make sure that you subscribe as well. I will I will announce when we'll have